The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here this Monday, February the 24th. Oh, I can't believe February's almost finished already. February the 24th. And we've got, just until March the 6th. That was the day 6 years ago that I got that buy signal on the Dow for subscribers, the DIA we bought right at the low. Held it for, about 18 months or something. But can you believe if we had just held on, even to part of that, today, it would be an amazing thing. Who would have believed that that could have happened? We are, at this particular point, in the S&P at 1852.83, up 1658. The Dow is up 137 at 16,240. The E-minis have gone from 1732 just less than a month ago, February the 5th. They're making all-time highs right now at 1850.75. Has the 120-minute chart just broken out to a new leg A instead of an E? This is incredible. I don't even know what to say, except that the patterns that we've been looking at, the reason why we went long in my opening call over a week and a half ago, was because we're looking at patterns that repeat. And those patterns that repeat are so powerful that if you don't jump on board immediately, remember I showed this chart, let me just break away for a second, because today's one of those days I want to just free think. I want to go through whatever I see. Is this the chart? Let me just move this one. Yeah, this is a good chart. Doesn't matter. What I had said and what I had shown subscribers is I said the move that we had from that doji candle on the 5th is just typical of that triple point gain, is typical of many of the other white candle moves that we've seen before after a doji low or a major low. Look at that. One, you go to the low of October the 9th. I keep saying to myself, in this particular market, in many sectors, it's just been a buy and hold, a Rip Van Winkle market. You buy and you just go to sleep. Within that context, the stock that you have can pull back. It could be doing anything it wants, but basically it should be making higher highs and higher lows. Not all of them, because we've rotated now. But if you look at the Dow, if you look at let me show you, this is what I showed my subscribers this past week, and I did the work, and then this morning, I sent it out. Look, if you're looking at the Dow in 3 time frames, so we've just made leg C. Now, leg C doesn't just say there's a guarantee that you're going to go to a D. But with these kinds of candles, with the stochastic at 87%, with the MACD still good, there's a good chance that you're going to approach the previous high. And that high still has 360 points to go, 16,588 in the Dow. Dow's lagging. Look at the S&P, SPX, 3 time frames I said. The 3 time frames are saying that the daily and the monthly are excellent technically. It's the weekly that has a pattern that says there's a lot of resistance coming up right here. And that resistance should be at, right here is what I drew. The price will be, if it's this week, it'll be somewhere around 16,350. That's where there's a trend line resistance. But extrapolating this pattern that I showed you right now, putting it into other contexts, look at this. The Qs, 1, 2, 3, Qs are up. 72 cents at 90.65. Leg B, I can't call it anything else but leg B at this particular point. 93% stochastic in the daily, weekly in the daily, and the MACD still very strong. So when I'm looking at this, I have to say, until I start to get everything together, and I'm looking at leg D's and E's in the dailies, but the weeklies cannot be in C or B. They have to be in D's or E's. Then I'm looking at something that says finally. And if I put it all together, and this is going to be very interesting for me, I have a scenario that says that somewhere around the first to the second week of March, that's just this coming week, and we're already in leg C in the Dow daily, leg B in the Qs, and they breaking out to recovery highs. Look at this. At 90.69, well, the all-time high was 120.50. 30 points is another 30%. I had said when we made that top, that the top that we see in the NASDAQ is going to be a top that I will never see fulfilled again in my market lifetime. So I'm just hoping I haven't put the sign on my head here, because I would love to see it at 120.51 for a new all-time high to complete that, fulfill that U-turn to the upside. It doesn't bother me, except, of course, it's 14 years. 14 years is a long time in the market. So we're going to be watching that. Now, when I look at the NYA, the New York Stock Exchange, very important, 10,401 is the level to watch. But to tell you the truth, there's that pattern that I just drew in for the Dow. To tell you the truth, I don't think it's really just one index that we're looking at right now, because the New York Stock Exchange, funnily enough, is actually leading in a certain way, because there's over 2,000 stocks acting beautifully. I mean, one of the reasons why I wanted to go long is I say to myself, if these candles continue to match other periods, I don't know how you get back on board. That's been the difficulty for these rocket ships to the upside. In fact, we have seen more rocket ships to the upside than to the downside in the past 6 years. Yeah, very interestingly. This pattern in the weekly chart of the New York Stock Exchange, says you got a trend line that goes all the way to the 10,600s. But I don't like to do that. I like to be as conservative as possible when I'm looking at potential, some kind of a potential either market top or some kind of major resistance. So I'll draw it in here and say it depends when it happens. But if it happens in the coming 2-3 weeks, then the 10,500s could be where you see some strong resistance. Even then, I don't really want to talk about a major top until a whole bunch of factors come into place. And those include the socioeconomic ones as well as the political ones. So all I would be looking for is when I get some kind of a signal that says we are going to make a top of major consequence. I don't think we can talk about a top of major consequence until we see the general public start to dive in. Oh, did I just cover it with that computer? I've had to do a bunch of things here, which is a little unusual. Okay, I've got this. I want to show you something here. Let me finish the numbers. Yes, Peaky, that possibly could give us New York Stock Exchange monthly leg E, or even an F. But this is even more important. Let me just run that down. Dow's up 146 at 16,249. The S&P is up, let me just check, 1760 at 1853. The composite index is up 40 at 4303. Let's see, we've got gold. The irrepressible, now it's the irrepressible gold index, or the gold futures, up 14 at 1338. I had for the GLD, remember last week I was talking about 120, on the GLD 128, as being the 9-period exponential moving average resistance. Hey, come on, 128. It's at 129.03. It broke that 200-period moving average resistance. And that's what I was saying. Once you get close, how many times have I done this? Maybe a few hundred times over the past many years. I've said when the 200-period moving average, which was not even in striking distance, becomes closer and closer, it then becomes a magnet. Waving my hand, shaking my hand. It becomes a magnet, and there it is. Couldn't do it back in August of last year. Couldn't do it back in October of last year. Couldn't do it back at peak D in January of, this is a daily chart, January of this year, 29th. Then it started getting closer and closer. Peak E with a doji, wasn't interested. Suddenly, pop, it goes to over it. And now what you got is a stochastic 93% and the MACD still strong. Nice action. Congratulations. Bravo, GLD. And the weekly chart is in leg B. Now I can say that's a strong move up, but it's nothing to the move that we had back in the week of the 28th of June, 2013. 114 goes to 137.55 in August. That was a powerful move, but still nothing when you're looking at the major monthly chart of the Spider Gold Trust. Going to the 185.85 level in September of 2011, plummets down to 114.68. Oops, no, 114.46. Should type that in so it's nice and clear. 114.46, 114.46, 140.46. All right, here's something else that's very interesting. So this is a gray A in the monthly. Finally, I can put that in. Great. Let's see. We've got silver. Silver's up a little bit, up 32 cents at 22.11. Platinum's up 11 at 14.40. And we've got, we've got, sorry for the noises and the sound effects. I had my grandchildren here last week. So it's still, this is the residual, the adult breakdown. We went to a peak D in the daily copper. Copper then went today. I saw this last time. I saw it happening. I thought, this and General Electric are the two things I'm going to watch real closely. General Electric, copper, and the VIX index. Got to keep a very close eye. And what happened is copper slumped to the 322 level, went to 322.60. Now it's trying to bounce back. Chapman wave Roman candle forming. But the weekly chart says, oh, man, be careful because just making these arch formations that want to retest the lows. Now, this is going to be very interesting. So high-grade copper to keep an eye on, especially as we go into that first or second week of March, if the market is still rallying. Bonds are down only 3/32 seconds at 130. I've been very impressed at the way the TLT has held. And one of the reasons I think is that finally the 200-period moving average at 108.88 is becoming a bit of a magnet. Now, I'm looking at this very much the same way. Remember, I drew this in months ago. The H in the Chapman wave methodology can go to an M pattern, lowercase h to lowercase m. That's kind of what we've got here. I'll follow this up when we get back. The dollar is down a little bit. Basil Chapman, Target Predictions Hour, 188-18779.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. I had a quick question during the break and email. Question was, BlackBerry might be worth a look on your radio show this morning. Chart pattern looks explosive here with some news supporting it, falling axe breakout on the daily. I have it at peak B in the weekly and with a possible run toward the 10.85 area to start week C. Now, this was brought to my attention over the Christmas vacation. One of our dentists who, well, he hasn't been with us for a while. Work was just getting too... I'm trying to finish some charts here. Work got to him. He had to be, with the economy the way it was, at a particular point, he had to spend a lot more time at work. So he had to leave the Den. But he's been a faithful TFNN for years. And he did a lot of work with GAN, did a lot of work with different things to study the Chapman wave methodology, helped me years ago with setting some things up. And we were looking at some charts together, and he said that he was long BlackBerry. BlackBerry? I said, come on, BlackBerry. And I looked at the chart and I said, you know what, you got something there. Well, we never went long in my opening call, even though I thought that there was a lot going for it on a purely technical basis. And what I said to him was, there are just too many mysteries with it. There are too many stories, there are too many things that come and just smack it on the nose. And all they got now is this proprietary technology. Well, it turns out that in the weekly chart, I had to be as optimistic as possible. I said there was a possible A, a brand peak D in BlackBerry, which is BBBY, trading. Oh, BBBY is not BlackBerry. It's Bed Bath & Beyond. I thought I knew this chart very well. It was an EFG to that. BlackBerry is BBB. Oh, BBB, BlackBerry, BBBR, BBRY, BlackBerry. There it is. Oh, okay. So, suddenly I'm looking at the chart. I'm saying, gee, that doesn't look like the chart. Of course it wasn't the chart. So I couldn't even tell you how many times I do charts. I don't know what the numbers are. I don't know what anything. I'm just looking at the peaks and the troughs. Maybe it's not a good thing. Maybe it's a good thing. But whatever it is, that's the way I tend to look at the charts. BlackBerry made a peak E, BBRY, trading at $9.87, up 73. Some talk about who's going to use the technology. Someone's going to use the technology. Well, that's always good. So they've got a lot in the department of, back in their technology department, that they can rely on. They can sell, they can copyright it, they've got everything. So what I'm looking at here is a situation where just on a purely chart basis, 892 was the low on the 3rd of February. And then on the 14th, 895. So you've got 92 and 95. So it's a successful test. So that becomes an A that almost failed, but it didn't fail. And this becomes an A minus because underneath it, you've got a new A and a B. Now, the pattern that I'm looking at is the pattern that in fact, in my next Master Trader Series class, I'm going to spend some time doing this. I'm going to talk about how the H pattern, and now I can go back to the H pattern, which is what I wanted to talk about before. The H pattern can become, you see it right there, that's the H pattern. This is slide 334 out of 476 in my book, Introducing the Chapman Wave Methodology. Go to the next slide and you'll see that scallop, that arch formation like a lowercase h, suddenly can expand and become an M, lowercase m pattern, and then a continuous M pattern until it either takes out the low decisively or it starts a brand new buy mode. Now, what I've found over the years, I call it the Sears Holdings, because it's not Sears and Roebuck from the old days. It's the Sears Holdings chart pattern. I noticed this once years ago, that it made a high-level consolidation, made the H pattern. I thought, oh, man, this thing's going to tank. It's going to take out the left side low bar for that H. Here's the H pattern. Let me draw it for you. I want you to become a little bit of a lesson in the Chapman Wave methodology. And this is what I'm going to spend time on, because I have on the previous one or two Master Trader series discussed it in quite a great detail. But we've had so many examples now of this that it is remarkable. Look, you get your top over there at peak E in BlackBerry. And it kind of coincides with a bunch of news and things. And it goes above the 200-period moving average. Remember, that's a very important move. Now it goes underneath it. So on the 22nd of January, it goes to 1085. Most recently, back in mid-December, it was at 554. That's a huge move. It's a double. And then what does it do? It pulls back. It looks like it's going to break the low of 892. No. It goes to 895 and starts another move. This move, if it takes out 1010, very positive. I'll be back. We'll talk more about it.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
So here we are, back again. Dow's up 155. S&P's up 18.5. I have to tell you, this is a marvelous market. It is a marvelous. Thank goodness we are only long in our my opening call. I just did not. In fact, I thought over the weekend there was a chance that I might want to go short a stock that looked very weak. I said, you know what? I don't want to get confused. I like what I'm seeing. I just have to stay with this, even if it's total disbelief, because we've been doing this since the beginning of the year, and you would expect. Under any, let me show you some. Oh, I'm going off on BlackBerry. BlackBerry made the H pattern. There it is. Down, makes the arch formation, and now it's making a cup formation. If it takes out very strongly, now it's got to do it strongly, but if it takes out $10.10 in any intraday move, this is a real good chance. There's nothing to stop it from going back to 1085 or close. If it does do that, it's going to be very strong in the weekly. Yes, good eye, Travis. I like that. So I would say the best opportunity was missed a little earlier. You got it earlier in the day if you did get it because it was still moving up. There's a little risk now that if you get in, you got all the way down to 960 to 950. Even 945 is a 9-period moving average support if it's going to fail, because we don't know if this H is going to turn into a cup formation. NACD is good because it's turning up and it hasn't crossed positive. Stochastic's very good because it's gone from a buy signal to a buy mode. MACD hasn't confirmed the buy mode yet, and the price hasn't, but not breaking strongly above the 1010 level. So I'm looking and I'm saying, yes, good eye. I would not get too carried away, but I would start a little nibbling right here. I think you're correct. It is looking quite good. Now, I wanted to do something else because I was right in the middle of the TLT. So there are three things I was in the middle of. TLT, look, there it is, that same pattern. In the daily, you've gone to, there's that little double bottom that we've managed to succeed at so far. There's that H pattern right there. And there's the left side, comes down like that, looks like an H, right? And if the TLT at any point in the next, from a week, anytime between now and between Thursday and next Tuesday, there's a strong move in the TLT above 107.18 is the high, about 107.25. Then the 107.84 200-period moving average is likely to be hit. But you remember I drew this H that goes to an M pattern, lowercase h, lowercase m, months and months ago, maybe 6-7 months ago. And we're still looking at it unfolding. So you've got to be a little careful in that you can't over-anticipate. There's a chance that this could just prove to be another H to an M pattern. But you've got the cup formation. I've drawn it in. It's a little lengthy, but they're two fighting. I like to talk about competing chart patterns. And sometimes it's best just to let them play out. Look, at this particular point, it looks like it's going nowhere. Suddenly, you've got the price of the TLT, the Lehman 20-year T-bond fund, maybe at 108.06. And then the weekly chart says, hey, that looks quite good. It could go higher. And if it breaks underneath 107, it says, oh, man, it's another arch pattern. So I let the patterns play out. I just step aside. In fact, I see nothing here. I see no trade personally right at this particular point, just a sideways move in the TLT. Now, I wanted to go through a couple of things. Look at this. I'm going to slap these charts up. I did them a long time ago, maybe 5 weeks ago, 6 weeks ago. I can't remember. I was sent the chart by someone, could even be longer. And I said, this is unbelievable. I was talking about the best performing biotechnology stocks of the past 52 weeks. That must have been maybe December. In fact, I think I remember now who sent it to me. Anyway, and here it is. We've got Lannett Company, not Gannett, but Lannett, L-A-N-N-E-T-T Company, Inc. This is a biotech. LCI is the symbol. Well, look at the monthly. It is parabolic, having gone from the 5s to 43.85 right now, with a high just 4 days ago of 46.17. But it's only, I'm calling it peak B in the daily. Yeah, maybe it's a peak E, but the MACD is strong. Stochastics at 89%. Here's the thing that I'm looking at. Leg F in the weekly. These are, how many, raise your hands. How many people have ever heard of Lannett Company, Inc., and even known that it's a biopharma? LCI, trading at 43.79, up 56 cents. Well, look at this. Puma, Biotechnology Inc. When I was an athlete in my youth and my teens, we used to have what we call spikes, the running shoes with those spikes underneath. I did not go for the Puma. They were the hot things. They were four long spikes. I had Laws, specially made, a gift from my father. English, beautiful leather, English spikes. They had 6 studs instead of 4, and they were not that long. I was a sprinter, and they just were so comfortable. They just were perfect. So I gave up Puma for Laws. DH Law or something. I bet they go gone way long ago. Anyway, Puma Biotechnologies, PBYI. PBYI. Look at this. A vertical move in the monthly. Puma Biotech E, it's biopharmacy, sorry. In leg E in the monthly chart, just a few days to go. It might make a peak E if it doesn't break above 143.65. It was trading just in November. If I said to you, folks, there's a stock that's trading at 33.70, what if I said to you that on the 24th of, let's make it the 24th of February, this stock's going to be trading at 131.31, up $2.05 on the day. What would you have said to me? First of all, you would have said, huh? Puma? Biopharma? I would have said, it is a Biotechnology Inc. Never heard of it. I'm sure most of you have never heard of it. But look at it. And look at the month. Look at the weekly. I should call it G. But everything about it says it could be peak A with a long-legged doji, and it's gone below. It comes back and tests the candle, which says you can now go to the top part and test the top of 143. I mean, these are biotech stocks, and this is not even Biogen IDEC. So that's what I'm thinking. We're going to a phase now that says we could get quite a sharp pullback within a week or two. But there could still be another phase, and I have to couch my words very, very carefully. I don't want to, I'm only setting up ideas. That's all I can do, because I'm just following the charts, and where they go, they go. If I get a sell signal and it turns out to be an even deeper sell signal than just a sell signal, great. But I'm starting off that when I do get some kind of a sell signal, certainly looking at the volatility index, the biotechs, the NASDAQ, the IBB, NASDAQ biotech sector, I'm going to be looking at this and saying, hey, is there a chance that this is just the tip of the iceberg, that we're going to still have the public start to clamor for these stocks when they talk splits, when they talk all this other stuff, and they go even higher? Or if they're not going to split at 360, are we looking, or 351.43 biotech, Biogen IDEC? Is this really the final phase? Leg B in the daily, leg C in the weekly. That means I can't even get a top in the weekly if that's correct. If this is not G, I've decided to call it G, as conservatively as possible G. I'm sorry, C instead of G. It could turn out to be G, and I'll change it. But look, the stochastic is at 96%. The MACD is good. The only thing that's telling me to be careful is the relative strength and the unbalanced volume. That's the blue line there, and that little red line there are becoming overbought to the extent that this is the area where you start to get tops. Doesn't tell you when. Well, it actually does tell you when, but you're going to have to wait for that signal. So I'm just throwing this out, that there's a chance that we do have a pullback. But it's not the pullback. We still have this crazy thing in 2014 where everyone starts to talk Kerix Biopharmaceutical. Let me see what that is. KERX. This is all part of that page that was sent to me, best performing biotechs. Oh, I had notated this. I remember this. This is A, B, B, C, and it could be a phantom. This could be a D, but look at that vertical move. It's still got room to go. KERX trading at 1686. Beautiful looking chart. So this is what I'm saying, that when you get a sector that starts to create an hysteria, you've got to take note that can go on for an incredible run of 6 weeks of really rocket ship performance. Not that there hasn't been really a rocket ship performance right now. So just throwing that out. Lorillard Inc. This is the tobacco, e-tobacco. We had a call recently, and I said, I don't think this is going to do much, and I think it's going to go down and retest the lows. Well, it did, and this person was looking at it more as an intermediate term buy, and I said, I just don't see it. I like to admit when I see something, I have an opinion, and I feel quite strongly about that opinion. And then in retrospect, because it doesn't do exactly what I thought, I must look at it again. I looked at it over the weekend, looking at it today, and I'm saying, you know what? Maybe because of the e-cigarettes it's going to be a bigger thing than I was thinking it would be, at least for now. And that the 200-period moving average, I did talk about that, the double test of the 200-period moving average in LO is the symbol trading at 48.69, is going to actually turn it into some kind of a decent, a strong bounce potential. Well, it's now just a little bit higher than before, and this person was looking at more as an intermediate term, and I gave him parameters. I said if it goes under this level, I'd be careful. I would take some off. If you want to keep some, then I would still put a stop on that other part. But I'm beginning to say, you know what? I have to say, based on the pattern of only the last 3 days, because there's that H pattern that is turning into a positive, I must admit that there is a chance that if Lorillard Inc. is able to hold this and treat the 48 to 47.5 as a support level and keep making higher highs and higher lows, you're thinking about it being an intermediate term buy and hold, I think could be correct. And I'm correcting myself right now. I wanted to do it, in fact, on Friday, even though it wasn't a great session for it. I was looking at it, but I didn't have a chance. But I wanted to do it today. I wanted to get this out the way to show you. Yes, there is that potential. Now let me just show you something with the daily chart. I had noted maybe I hadn't. All right, what we're looking at here. See, if I don't like these trend lines, these very long-term trend lines. When you say, oh, if it breaks that trend line, it's up and away. I don't really believe that. I just believe that it's a focal point. So this downtrend line from the doji high of 53.27 on the 20th of November, I'm looking at it and I'm saying, you know what? Within this, there's a very strong resistance area, and it's right there. And I'm coloring it in red. Pink, actually. Pink. And I'm coloring pink. There. And this other one, I'm coloring in green, light green. Why? Because if it breaks out, first of all, if it breaks to the 49.60s, that's good action. That's good action, but the great action will be if it starts to trade between 50.22, the high of the 11th of February, to the high of January the 22nd of 50.61. Not a big distance between the two, but if it's able to take that and by the first week of March, if it's trading anywhere close to the 51 area, I have to say your eye was right, your thinking was correct, I was wrong. There is something here, and it's starting to break two very important trend lines. One in the daily that I just discussed, but it turns out to be exactly the same one in the weekly chart. That's unusual, and it says if at any point Lorillard is starting to trade in the weekly chart up in the 50 area, 50 and plus area, nice action, and that monthly will start to improve. So I have to apologize for saying that I didn't see much at all on the upside. The action today says to me, action last 3 days, says to me, no, you were not right. You were correct in saying that the 200-period moving average has to become a bounce-off area. You didn't think it would be, but it turns out it is, and the MACD and stochastic are giving nice signals, and there was a nice positive divergence in the technicals. So fess up and say, wrong, it can go higher. Now, I'm going to do a couple of other things when we get back. I'm looking up there, 181 in the Dow. 2120 on the S&P. I love this market. I'll be back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks, we're back. Up 187. S&P's up almost 22. Man, I tell you, this is quite amazing. It's amazing because look how many of these triple-digit moves we've had. And as I said, let me just show you something here. The SPXL, which we're long at 59.64 from the 13th of February, is trading at 64.64. Look at those green candles. Big green candles. You know how you always hear, oh, over and over. Listen to any anytime, what's his name? I always like to say it. On CNBC, he always does this analysis. Why am I forgetting his name? Well, there are different people that like to say, the move down is way quicker than the move up. And I always say, no, if you do enough charts, if you do enough charts, you'll see that that's not true at all. It is only true in crash mode. And in crash mode, it could be even a 1-minute chart can go into crash mode. It means that sometimes the move down takes out 6, 7, 8, 9, 10, 15, 20 bars on the left side. But most of the time you get the arch formation. Remember what I talk about, arch formation? The arch formation is so important in any process. I can show you not one, not a dozen, not 100, but thousands of charts that have this formation. They take almost the same time going up as coming down. And sometimes we've seen that you can take less time going up. And we've just done it. Look, there's a left side price time match right here to the low. To the low of the 5th. This is the equivalent of the S&P or the SPY. So it makes a high of 63.94 on the 15th of January. Well, it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days to the low. Wait a minute. It took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days to break it on the upside. Now, no one's talking about that. That's a rocket ship. That's the opposite of a crash. And all I can say is that we've seen this many times in this this is the biggest bull market that I can ever recall. This is just an incredible market, number one. Number two is we do have to have a 14 to 18 or more % correction at some point soon. Are we getting close to it? Well, it depends on the rotational factor. So we're going to run out of time at any moment now. And Larry Pesavento is coming up, so stay tuned. Got fabulous programming coming all the way through. I love Larry's calls on the goals and the way he's been looking at it, as well as his rendition of the patterns that he's following right now. And that says that the rally has been very strong, and it's correct. Look at the way we've gone into leg C right now, broken above 63.94. If I did the SPY, which might be a little easier to see because some of you will have the SPY maybe already notated in your own way, that's only in leg B. So I have to remain very positive since we broke out, certainly since the 13th or so when we went along the S&P. Via the SPXL, 300% long, the SPY. And now what's happening, I don't know what to call this weekly. Is this leg A? How can I be talking about a correction when this is only A? I'm going to have to spend more time on this weekly chart. But it looks like it's an A. And we've just started leg E. No, this is an extension of leg D in the weekly chart. This is a freight train. And it's moving, and the lights are coming through the tunnel. I'd be a little careful here if you wanted to be sure. I like the action.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
You're watching Tiger TV.